Welcome to FinTech Chatter News, presented by Tier 1 People, leaders in FinTech executive search. Follow us on your favorite podcast player or FinTech Chatter TV on YouTube.
Welcome to Blockchain News, a monthly roundup and dissection of the big news headlines across blockchain and digital assets. I'm your host, Dexter Cousins, and this month I'm joined by Blockchain Leader of the Year and founder of Genesis Block, Chloe White. Before we chat to Chloe, here's a quick roundup of the latest big headlines. Crypto exchange Huobi looks for a new buyer. Reports that Leon Lee, the co-founder and CEO of Huobi Global, is in talks with investors to sell his majority stake in the cryptocurrency exchange. Sam Bankman-Fried and Justin Sun are said to be likely buyers. BlackRock and Coinbase are partnering to offer a spot Bitcoin trust. BlackRock has seen substantial interest in crypto from their clients despite the market's steep downturn. Its new Bitcoin trust follows a deal to connect BlackRock's Aladdin platform to Coinbase Prime. Well, it's been a massive week this week for blockchain, and as I know very little about it and won't pretend to either, I thought the best thing to do was to bring the greatest blockchain expert I know, Blockchain Leader of the Year, Chloe White. Chloe, welcome back to the show.
It's great to see you, Dexter.
Yeah, great to have you back with us. And as I mentioned there in the intro, it's been a pretty incredible week. It usually is an incredible week in blockchain, but this week's been even more incredible.
Yeah, there's certainly been a roller coaster of news this week. It's not a quiet bear market.
It's not at all, is it? Well, and we're not going to mention price again, as we always promise not to.
The golden rule.
Yeah, the golden rule. But let's kick off with something that's happening here in Australia with the RBA making a fairly significant announcement this week.
This is really interesting news that has come out from the RBA. It's in relation to central bank digital currencies. We've seen in the blockchain ecosystem, there's been a proliferation of stablecoins that have been issued, where essentially it's a cryptocurrency that's pegged to another asset, and the most popular stablecoins are pegged to the US dollar. And what's happened around the world is there's been a lot of central banks who've said they want to investigate the public issuance backed by government of these crypto stablecoins. And so the RBA has spent a number of years researching and running pilots on a wholesale CBDC, which means no retail access, which means they've been partnering up with Australian banks, but they have not involved any ordinary Australians or really done anything public in terms of thinking about how an everyday Australian would use a publicly issued digital Australian dollar. And what happened a few days ago is the RBA announced that for the first time, they will be explicitly and publicly looking into retail use cases of a central bank digital currency.
Awesome. So, look, the kind of cynic in me wants to ask, is this just another case of innovation theatre, or do you think there's really something here?
I think looking at the history of the RBA in this space, they have taken a slow and cautious approach, which I think is quite sensible, given all of the different policy outcomes that they want to weigh up. But I would say that the work that the RBA has done over the years has genuinely built up their own capability and expertise on this technology. And I'm sure that the next round of pilots that they do will continue to shore up their internal capability. I think that the fact that they're partnering up with the private sector to do this work is quite important as well. And they've demonstrated, again, a good track record of being willing to enter into those partnerships. One of the unique things about the way that this particular pilot is unfolding is that rather than going through their own network of banks, they're going through the Digital Finance CRC. And a CRC is where the public and private sector come together to fund research. And the CRC that we're talking about here also involves the cryptocurrency sector itself. So it's no longer just a case of the RBA and some big banks. We're actually working with the cryptocurrency industry now in this next phase. So that's another exciting aspect of this.
Wow. So that's super interesting, because my next question was going to be really around, Australia is one of the world leaders in digital payments. And I think consumers have got it pretty good here when it comes to transacting on a digital basis. Do you think there's a need for a CBDC, or do you think there's we can do better than what we currently are with the current payments setup and the new payments platform, PayID, etc.?
I think there's certainly demand for CBDCs. There's been a loud voice of passionate cryptocurrency enthusiasts for some years now who've been pointing out what the benefits might be of a CBDC. On the other hand, there's an equally loud group of very concerned citizens who worry that this type of technology could be abused by governments. And certainly when we look at this on a global scale, we see that different governments don't have particularly great track records of protecting the liberties and rights of their citizens. And we know that that certainly the payment system is in some respects used as a kind of surveillance technology already, particularly around the anti-money laundering legislation that's managed through the Department of Home Affairs in Australia, and similarly around the world in other governments. So there are certainly ways that this could go well and ways that this could go wrong. And I think it comes down to what is the policy intent and how would a CBDC be designed. But it's also important to note that in making this announcement, the RBA has not committed itself to actually releasing a full-scale CBDC for retail use. If you read the wording of their press release, they've made it clear this is just a pilot. And so they're still maintaining their long-held position that they essentially still need to be convinced that a retail CBDC, that the benefits outweigh the costs and the risks of implementation. So I don't know how many Australians at the moment would be actively thinking about their own usage of a CBDC, but certainly within the cryptocurrency enthusiast community, it's a very interesting topic with a lively debate around it.
Yeah. Interesting. I read today that I think ASIC had recently did a survey where I think 44% of retail investors have crypto in their portfolio, which is pretty incredible.
It's an absolutely stunning statistic. There had been a lot of skepticism about some of the surveys that had been issued by the private sector that had been looked at during the Senate inquiry into fintech and crypto. And the fact that ASIC themselves have run this survey and it has confirmed cryptocurrency interest in Australia is enormous. And out of those 44% that you just mentioned, Dexter, a quarter of those, crypto is the only asset that they're invested in. Wow. So, this is a really interesting survey that's come out from ASIC. And we've got obviously a lot of fintech in Australia, and Australia does perform really well in fintech. But Australians don't love banks and Australians don't love their banking systems. There's a lot of things that really don't work very well at all about traditional finance. And fintech does aim to disrupt that. I see cryptocurrency and blockchain as a subset of fintech. And to the extent that this technology and innovation can be part of that improvement of the user experience and consumer choice, I think it's a fantastic thing because it injects more competition into financial services and products as well. And I think that, that's actually something that we shouldn't dismiss as not having value because we have seen it's taken a very long time to roll out things like open banking and consumer data right. if Web3 can help push these innovations along, we should be really supporting that.
Now, we talked about this a little bit around, I guess, concerns around government. The US and SEC in particular, really, wild. Feels like a wild move this week with Tornado Cash. What are your thoughts on that? And could you tell us a little bit of the kind of backstory as to what's kind of really occurred there?
This is a very controversial issue, and it comes back again to that tension between, the surveillance state and the policy intent of anti-money laundering regimes, and then also people wanting to try and protect their privacy on the internet, which we know from social media and other stories that we've heard is very hard to do. And even for people who have more of an interest in online privacy and data protection, we know the odds are stacked against the ordinary person when they're trying to be safe online. And with blockchain technology, because it is so transparent, we know the ledger is auditable and you can go and analyze and trace transactions. It is quite difficult to be private using blockchain. And so what people in the blockchain community have been doing for so long now is they've been trying to find ways of protecting their identity. And there are a lot of legitimate reasons why they would want to do this. Maybe they're trying to prevent being hacked or scammed or attacked, or just want to make sure that they're minimizing the potential for a stranger online to harass them by de-anonymizing any of their online footprints. So it's not purely just a case of people who are criminals or illicit actors, undertaking nefarious activity. However, what happened this week is one of the open source technologies that some people had used to try and preserve their privacy through cryptocurrency transactions, called Tornado Cash, had been sanctioned by the US government. And this is very unusual because sanctions are generally reserved for people or countries. In this case, the US has sanctioned lines of code. They have said, we're actually sanctioning this technology. The protocol is not to be used by any Americans. And they've also shut down the GitHub accounts of developers who had been involved in contributing to the code base. And so this is a move away from a historical precedent that had been standing for quite some time, almost since since cryptography had really been invented. And essentially, we're now in a world where code is not being looked at as lines of text that equate to speech. It's actually being looked at as, possibly a weapon, if you look at it from that perspective. And so having sanctioned lines of code, now there's a big question mark hanging over all of the open source technology that people use online. And so this touches on the majority of protocols that we know and love in the blockchain space, and reaches outside of blockchain too into other open source technology. So we've entered a new unknown era where the precedent has been broken. What is the US going to sanction next?
It's crazy, eh? And when you think the kind of geopolitical tensions that we've got, what we've seen in the Ukraine, what we've seen, kind of starting to kind of evolve with China, you do wonder if that's, this is a kind of knee-jerk reaction to those types of geopolitical events that are going on.
Yes, I had a look at the wording, the official wording, the language that was used by the US government when they explained what they had done. And it's quite interesting to see how they're describing all of the usage of Tornado Cash as having been a result of illicit actors, wow. Essentially suggesting that there have been no valid uses of this technology at all, which are, I wonder if that's accurate. When you meet people in the cryptocurrency community and they talk to you about the experiments that they run with technology and the reasons they use different technology, a lot of the time it is just because out of a matter of principle, they are trying to execute best practice on their own behalf, or they're simply technology enthusiasts and they love to experiment with how different things work. And, I find it really hard to believe that every single person who's engaged with Tornado Cash in any way had bad intentions or was doing something wrong. But clearly the US is wanting to send a message here that says we are really unhappy with the developments in anonymity enhancing technology. So it's certainly going to make a lot of people in the space quite wary when thinking about what they want to build or contribute to or use as a consumer as well.
Now we're going to kind of finish off on, I think, what's been probably the biggest thing to happen this week, and that is the testing of the Ethereum merge. You want to share with us a bit about what's happened this week there?
That's right. So for quite a number of years now, the Ethereum ecosystem has been wanting to change the consensus mechanism that underlies their blockchain. And what that means is they're transitioning to a new chain. They've currently got two chains running side by side, and there's a big event happening in about a month's time called the Merge, where this transition will be complete. And it has been quite slow to get to this point, but in the last 6 months or a bit more, there has been a lot of momentum, and now the finish line is in sight. So what we can see is that all of the tests that have been run in recent months have gone quite well. And so now we're ready for the final merge in the middle of September. So, one of the main drivers or motivators for making this radical change to the structure of how Ethereum works is that the Ethereum community wants to make their blockchain more energy efficient. And this is the way that they've chosen to go about doing that, which is quite a different approach taken to, for example, the Bitcoin community, where they've kept the same consensus algorithm, but they've moved the underlying infrastructure onto a combination of renewable and sustainable energy sources, not 100%. But certainly a very high and growing percentage. So two very different approaches being taken there.
What do you think is the likelihood of the merge actually happening mid-September?
If you look at the track record of this project over its lifetime, the deadlines have been so far out and pushed back, a year and another year and another year. I think a lot of people have a little bit of PTSD from all of those delays and have stopped believing any updates related to the ETH merge. But, the finish line does appear to be in sight, and hopefully there are no disasters.
Now there's, been a fair amount of, I guess, there's never good news without bad news or kind of concerns in the world of blockchain and crypto. The kind of, I guess, discussion that's happening around proof of work versus proof of stake and what this might mean for a kind of forking. Do you think that's likely to happen?
Absolutely, yes. I'd be very surprised if people do not mine the proof of work chain after the merge. And, this is one of those really interesting case studies where you look at how the design of a blockchain it incentivizes actors in a very game theoretical manner. For anyone out there who finds it profitable to mine the proof of work chain, they will mine, regardless of the desires of the community who moves on to proof of stake. If there is any value to be extracted, this is the nature of open source, permissionless technology. Somewhere there will be somebody on the internet who wants to download and run open source code, and you simply cannot stop that from happening. So I'm very sure we will see proof of work mining continue. But again, if we look at the history of what happens when you have a hard fork on a blockchain, typically the chain that is not the consensus chain that has the backing of the community, it tends to basically trend towards zero. So we saw this happen with Bitcoin Cash. We saw this happen with BSV and Bitcoin Gold and other forks of the Bitcoin chain. And we also saw this happen with Ethereum Classic, ETC. Sure, there are still, for whatever reason, some people out there who trade ETC, but I'm sure they're just, day trading for the volatility. I haven't really met anyone who is bullish on the future of the Ethereum Classic blockchain in any ecosystem sense. So, I suppose that if you want to continue to engage from an investment perspective with proof of work Ethereum, you'd really have to study the history of hard forks to get a sense of whether that's going to be a good long-term strategy or not.
How do you feel after this week, and kind of what's your sense as to, have we moved further forward this week? Have we moved backwards again? What's your sense, Chloe?
There are glimmers of hope everywhere always, but this is a tough week. And the thing that I'm the most concerned about at the moment is, as you phrased it, Dexter, a knee-jerk reaction from regulators and policymakers around the world who, still do not understand this technology and its potential as well as they should. And so they're never quite sure what part to regulate, how harshly to regulate it, or even how to leverage the technology itself for win-win outcomes. Coming back to this Tornado Cash issue, I'd love to see more of a discussion about, zero knowledge proofs as something that can enhance KYC outcomes and also preserve the identity of individuals, rather than giving away unnecessarily private information and putting people at risk. So, we don't want to create these huge data honeypots that can be abused by genuinely illicit actors. It's not the policy intent. And I think that there are better ways to go about things than with these, blanket bans or knee-jerk reactions, and considering, I suppose, the strife that the industry is in following the fallout of Luna and the cascading liquidations that came from that. We're certainly not in the good books at the moment, and there'll be still a lot of education and work to be done to find what are going to be those good policy solutions that help to make the space more safe, more trustworthy, but that don't also kill it off prematurely.
Well, Chloe, it's been awesome to have you, and to think we didn't even talk about BlackRock as well. That would have sent the price of BTC up about 20%, I think, 12 months ago. But this is is this now, do you think this is now where we've kind of found that, kind of balance where we're not having that huge volatility anymore? Not asking for a price prediction.
I'm a little unsure how long it's going to take the markets to recover from this recession. In June, I did say that we had reached a capitulation point when Bitcoin fell below 20,000, and it has recovered quite a bit from its low point, and we seem to be in more of a situation now where, those Bitcoin ETH assets are looking a bit more like stable coins now. We're in a crab market, just sort of gently bubbling along sideways. So, I guess it will really depend on macroeconomic factors. And that's kind of the view that I've taken. We don't know, I suppose, what the economy will look like coming out of this, because it has just been so long since the macroeconomy had this combination of indicators.
Awesome. Well, I think this has been so good. I think we should do this every month.
It would be great to talk to you more, Dexter. I always enjoy your questions.
Cool. Well, excellent. Thanks for joining me today, Chloe. If people want to get in touch, what's the best way for them to reach out to you?
Best way to reach out, you can message me on Telegram. My handle is Chloe White Oz, AUS. You can also connect with me on LinkedIn, but just include a message with your invite.
And you can connect with me, Dexter Cousins, on LinkedIn and Twitter. Don't forget to follow us and leave us a 5-star review. It really helps us promote the show to others. Until the next episode, stay safe